Hello, everyone, and welcome to our session today with Avalara. We're going to be talking about how you can get free tax services in 24 states with Streamlined Sales Tax. And joining us from Avalara is Stacy Dose. And before I turn it over to Stacy to cover on this hot topic, I would just like to let you know that we will be recording the session and it will be available in our on-demand webinar library for you to review and share with anyone. And if you do have any questions, please feel free to type those into the questions box and we will get them answered during our Q&A time at the end of our session. So now I will pass it on to Stacy to kick off our presentation.
Great, thank you, Angie, and thank you to Innovia for having us on this joint customer webinar. And again, thank you guys for taking time out of your day. I know it's always a busy time for people to get some time off to listen to something like this, but we want to talk a little bit about Streamlined Sales Tax and how you possibly could get free tax service in 24 states, as Angie said. My name is Stacy Dozy. I'm a Strategic Alliance Manager here at Avalara. That means that I get to work with fund partners like Innovia to do things for their customers and help educate and just kind of manage those relationships. So what we're going to talk about today, I'm going to give you a brief overview on SST, or we'll try to give you a little bit more than just a brief overview, but give you an overview of SST, what it is, why it came about, some of the changing tax obligations that make SST more prevalent today. We'll talk about some of the key features and benefits of SST, and then of course, how is this free and how do you get it? So, how would we be offering free tax service to you? And as Angie mentioned, we will have some time for Q&A at the end. I really don't expect this to take an hour. I'm thinking we might be able to get through this in about 30 minutes. So if you have questions, please feel free to put them in the chat. So let's first talk about a little bit about an SST overview. So what is SST? So from here on out, that's all you're going to hear me say probably is SST, but SST is really short for Streamlined Sales Tax, which is also short for Streamlined Sales and Use Tax Agreement. So this was an effort by many state and local governments to try to simplify tax compliance for companies. They wanted to try to reduce the cost and burden that some companies were seeing when it came to being compliant with sales tax, and also to standardize and simplify tax management. So I'll talk more about this in detail, but at a really high level, they really were driving to look at what were all of the things that states were doing around tax, but they might be doing it a little bit differently from state to state. So all of these states were doing it, but maybe a little bit different. So they wanted to create some rules that brought uniformity to this process, some uniform definitions, and most importantly, a standard form across these states, so that as people are expanding their tax footprint, we'll talk more about this in a minute, they maybe were going from 1 or 2 sales tax forms to 15 to 20, and that's very cumbersome because all of these states have different forms. So for some of these states, they also wanted to come up with a combined and standard form for filing to make it easier in that process, because that step alone can be very, very complex. So this, believe it or not, actually started in 1999, and the reason why I say believe it or not, we'll talk about some things that happened last year that have brought the spotlight onto sales tax. But actually back in 1999, the National Governors Association and National Conference of State Legislators came together to, again, try to create this idea of less complex, more uniform tax policies across these states. And so they wanted to also, address an unlevel playing field for some merchants. So when you talk about, you have your large retailers, who are selling across states, but you also have your smaller ones, and all of them have to play by the same rules. And so they kind of wanted to make this a more uniform playing field for all companies that were having to deal with sales tax, so that we could make it, again, easier and more uniform. So when I talk about some of these states and how you could get free tax in up to 24 states, the SST Association is actually comprised of 23 full members and 1 associate member. So the 1 associate member is Tennessee. The only difference with them is they've actually achieved the substantial compliance needed by the SST organization, but not necessarily each and every provision. They've complied with enough, and they've created enough compliance with enough of the rules that the group has agreed to let them be an associate member, but they're not a full member. So from your perspective, probably not a whole lot of difference. That's why we kind of just say 24 states comprise in this SST. And this may or may not, I'm not necessarily a sales tax expert. I'm not on the board. By the way, the board that kind of governs this is made up of one person from every one of these states. So they come together and they kind of work on all these policies along with local governments and tax practitioners. And so each and every one of these states has somebody involved in that. And we'll look at this map again in just a minute. And then why the need for SST? So we've kind of talked about this a little bit, but of course all of you know that sales tax rules are changing and they're changing rapidly. And this has nothing to do really with anything that's happened recently, but it's always been the case. There's always new tax rules coming down, new tax rates, new taxability on products. It's kind of happening every year, multiple times a year. So this is nothing new. It's just getting more and more complex, because many companies now, like I said, their tax footprint has expanded. So it's now not just about understanding the tax rules in your state, for example, but possibly multiple others. And so this is a way for companies who are have a tax footprint in multiple states, that they can have some uniformity, at least across a large majority of these states. And again, we talked about some of these other things about the local merchants, suffering because the playing field wasn't even across those who might be, big box retailers. There was also some significant loss in tax revenue in some states due to online sales. And so that was another reason these states came together and they said, not only do we want to make it easier for the merchants and for the companies, but also we need to find a way for our states to continue to earn that revenue that we're looking forward to from transactional sales tax. The other driver in this, and the other reason that some of you may be hearing about this now for the first time, even though SST has been around since 1999, is because of a ruling that happened last year. So I've kind of alluded to this. Last year, June 21st of 2018, there was a Supreme Court ruling that in South Dakota v. Wayfair that really changed everything that we knew about sales tax. And so now there was this idea of economic nexus, which I'll talk about in a minute. So that's kind of a quick overview of what SST is. I want to just talk a little bit about some of the tax obligations and a little bit more about this Wayfair ruling, and then we'll talk about the key benefits of SST. So kind of expanding on the whole idea of South Dakota v. Wayfair. Again, this goes back to a previous court decision. Actually, there were two of them, Quill v. North Dakota and the National Bells Hess versus Department of Revenue of Illinois. Quill v. North Dakota was a ruling that took place in 1994, I believe. And the ruling that took place at that point was that physical presence was what gave a company nexus in a state. So by you having a building, employees, inventory in a state, you had an actual physical presence in some way. That was the mainstay of what gave you an economic or a tax obligation in that state. So this ruling that came down last year really overturned. Now I want to say overturned, but keep in mind I'm not saying replaced. Physical nexus, is still very, very much a reason for you to have a sales tax footprint in a state. So it didn't go away. Really, there was an addition to physical presence to now include what we call economic nexus. And that's what the ruling in South Dakota v. Wayfair was. And so South Dakota, had this realization that they were losing a lot of revenue from retailers selling into their state that had no physical presence. And this went all the way up through the court systems, and the Supreme Court ruled that yes, it is possible for you as a company to have what they would call an economic footprint in a state, thereby giving you economic nexus. So South Dakota, in response to that, has now imposed what they call their economic nexus thresholds of either having $100,000 in sales or 200 transactions into their state. So now, aside from a company having this physical presence obligation, so whether they have a building or remote employees or inventory sitting in a state, they now could sell a certain volume of either dollars and or transactions into a state and now also have a tax obligation. So what has happened since last June is a number of other states have fallen quickly in line with saying, yes, we also have economic nexus thresholds as well. So and this goes to how these tax obligations are changing, because where a company previously maybe had one or two states that they were in, maybe they had their home office and a satellite office, not their home office, but their headquarters and a satellite office, or maybe they had inventory in like fulfillment by Amazon, so they had a few states. Now, based on their sales, they could have economic nexus, and so their footprint could be expanding quite fast and quite expansively. So I just want to give you an idea of how some of these things have changed, though, because not everybody has used the thresholds that South Dakota has used. So these are just 3 examples, and the main thing that I want to tell you about is the and or statements here. So for the most part, Alabama is really a revenue-only state. There is an and there, but it means they engage in additional activities, so advertising and stuff like that. But by and large, Alabama has said if you exceed $250,000 in the previous calendar year, you would have an economic nexus in Alabama. Whereas Connecticut has said $250,000 and 200 transactions, and that in that case is the previous 12-month period ending September 30th. And then of course, Maine is saying it's $100,000 in the current or previous calendar year or 200 transactions. So this is just to give you an idea. We do have additional collateral for you to use to look at all of the different states, but you can see there are different dollar amounts, there are different transaction levels, and some of them are and or type criteria. But most importantly is really to tell you that really pretty much all of the states have jumped on board with this. There are 5 states that do not have sales tax. Oregon and Montana, for example, are non-sales tax states. So some of these never will have economic nexus rules, but you'll see that by and large, everybody in blue is a state that now has economic nexus thresholds on their books. So, you know, you as a company, when you're looking at selling into any of these states, do you know what the thresholds are in these states and what your revenue into those states is and how many transactions? More importantly, and I wouldn't say more importantly, but I guess an additional piece to this is if you're also a wholesaler or a manufacturer, I have a lot of those customers say, well, all of our sales are exempt. And the reason that I bring that up is because some of these states, their thresholds are based on total revenue, not taxable revenue. So you may meet a threshold even though they're not taxable sales, which would obligate you to register in that state and remit as a $0 return. And ultimately, if you were audited, you would have to then prove why you didn't collect tax by providing your exemption certificates. So this is as important for wholesalers as well as it is for manufacturers, because there's still a possibility of having nexus in some of these states and having to register and remit and then show why you did or did not collect tax. So again, just for comparison purposes, this is all of the states that have an economic nexus threshold on their books. I just want to flip to the other map that showed you the 24 SST states. And of course, the ones in blue are the ones that do not have sales tax right now. So, I mean, it doesn't cover everything, but think about how your business may be expanding in terms of their sales tax footprint. SST can be a very beneficial thing because it does cover a vast majority of the states. And then, like I said, include those 5 where there's no tax, and you know, you've got some pretty good coverage there. So let's talk about some of the key features and benefits. And I'm not going to read all of these. I can certainly make them available to you. And as Angie said, this will be recorded. But one of the things that we talked about earlier was uniform rules. So again, every state may have had rounding rules, for example, but they may all have been different. So these 24 states have come together and have created uniformity within how they round tax. And this can be very important if you've ever done a tax return. Rounding can cause you to be off by a little or a lot. So these states have said, we want to make this all uniform across these states. Uniform rounding rules, uniform treatment of bank holidays, drop shipment rules, all of these things they've tried to create uniformity in their rules. The other thing they've done in terms of uniformity is definitions. And this seems like it would be pretty basic, but in a lot of cases it clearly wasn't. You know, what exactly is a soft drink is a soft drink, or computer software, or pre-written computer software. I mean, those are the areas that you can really imagine where those definitions could vary from state to state. So these 24 states have come together and said, we now have uniform definitions that if you know and your system is set up to handle tax for pre-written computer software in this state, it should be the same in all of the other 23 states. So again, creating that uniformity with those definitions. And then the reason that all of you are likely here is one of the key features and benefits is potentially free service for volunteer sellers. So what that means is free registration, so tax registration in these states, free transactions, free filing, audit assistants, and so on. And then you'll notice at the bottom it says non-volunteer. So we're going to talk about volunteer versus non-volunteer here in a second. But of course, like I said, the main thing here is some of these free services that you can get by being a volunteer seller in these states. And this just expands on that a little bit. Sorry, it's a little redundant, but you know, there's just some additional things like rate simplification and no caps or thresholds. So that's another important piece. So let's talk about these statuses, the volunteer versus non-volunteer. So I'm going to talk about the easiest one first, a non-volunteer seller. In any of these 24 states, if you currently have a physical presence, meaning you have an office, you have employees, you have inventory, and there are some levels here that we'll talk about. But if you already have a true physical presence in any of those 24 states, you are considered a non-voluntary seller. You likely are registered. If you're not, you should be. You're collecting and remitting, and you're fine. In other states where you do not have a physical presence, you could be a volunteer seller, which means you would be eligible for all those free services, free rates, free filing, all of that stuff, as long as all the other thresholds are met, or not met, I should say. So if your value of property in a state is under $50,000, if your payroll is under $50,000, so you can kind of get here, they're kind of saying you don't have a physical presence because you don't have enough property, you don't have enough employees in that state, and so thereby you likely don't have a physical presence. You can be a volunteer seller. So keep in mind, at the bottom there's a note that say, you know, these activities do not determine volunteer or non-volunteer status. This economic nexus that we talked about, if you don't have a physical presence, if you don't meet these $50,000 and 25% thresholds, but you have economic nexus, you could still be a volunteer seller. So even though you're required to register and remit tax, you could get those services free, which we'll talk about more in a minute. The other thing that says prior registration in a state, I want to just clarify that. If you have registered in a state previously because you have physical presence, nothing changes. But some companies have had to register in a state because they've somehow triggered a random presence. So things like that might be where at some point they had a trade show or something like that. You know, they had something that at one time qualified them, maybe for a brief moment, it was a small trigger. So there might be a possibility in those cases where you could still be a volunteer seller. But if today you have a physical presence, you would be considered a non-volunteer, and you'd be responsible for all of the payment in those states for calculation, filing, registration, etc. The other nice thing about this is it used to be, and I don't exactly know the dates, and I apologize for this, but it used to be that if you were going to opt into this program, you had to do all 24 states. Now you actually have the ability to kind of be selective about the states that you choose to go into. So obviously as a non-volunteer seller, you're already in some of them, and you can choose to volunteer only on the ones where you have economic nexus or where you're going to be approaching economic nexus. Or if you just don't know where you're going to be in the next 12 months and you think you're going to get there, business is booming, you might want to just go ahead and add all 24 states and just save the trouble and be set up. But you have the ability to pick and choose which states you go into as far as SST is concerned. So I just want to talk really briefly about, you know, how is this free and how do I get it? And so Avalara, and part of the reason that we're here talking to you is Avalara is an agent certified under the Streamlined Sales and Use Tax Agreement to perform all of the end-to-end tax solution. There are only a handful of tax solution providers out there who are CSPs in this program. And what that means is under this agreement, not only can companies like yourselves volunteer to be a member, but and the states volunteer, but any of these states who are in this program have agreed that they will pay their CSP providers for any of the volunteer sellers in their state. So basically what happens is any of the costs that you would incur in these volunteer states, the SST program is going to pick up on your behalf and pay the CSP provider. And again, there's only us and a couple of other people who right now are certified to do that, because we can, of course, give you all of the end-to-end solution, which I'll talk to you about in a minute. So talking about that end-to-end solution, really quickly, a little bit about us. Avalara is a cloud-based product. We've been around since 2004. We've always been in the cloud. We had some very bright people back, you know, years ago that thought that this was the way to go, and it turns out they were right. So all of our secret sauce, all of our information is in the cloud, and we do have a team of tax experts and researchers that are constantly in contact with state and local governments to make sure that we have all of the latest and greatest tax rates, tax boundaries, product taxability, all that stuff held up in our system. And of course, that will integrate directly into any of your end invoicing systems, whether it's your ERP, your e-commerce, your POS system, any other homegrown system that you might have, because we do have an API. We're going to integrate directly with that to go ahead and look at all of the rules around your products and where you sit to get you a product taxability. So that's really our calculation piece, or our tax determination is the piece that will go up and say, do you have nexus in this state? Is this product taxable? Is this customer exempt? And it will come back and give you a rate on each of those transactions. I did mention earlier when I'm talking about wholesalers and manufacturers about exemption certificates. Obviously, any other business, any distributor, anything like that would also have some exemption certificates that they might have to manage. We do have a piece that covers that called Cert Capture, so that we can effectively electronically manage all of your exemption certificates. We can do electronic requests to your customers. We can bring them in and store them in our cloud, and they're easily retrieved, and it can integrate into the tax calculation piece to determine if that customer is or not exempt from sales tax. And then finally, there's the returns and filing. And we talked about SST. It's made a little bit easier in these 24 states. There is a uniform document that helps tremendously. But if you happen to be in any of the states that are not part of that, that means every state could have a different form. And so Avalara can help to take care of managing your returns, filing them for you, and managing any tax notifications for you. So it really is a true end-to-end solution. And like I said, the SST program will actually pay for those services for anybody who qualifies as a volunteer seller in any of those 24 states. So with that, I think we did pretty good. I thought we'd be at about half hour. I'm going to open it up and just see if anybody has questions.
Thank you, Stacy. And no questions have come through at this time. But if anybody does have any questions that you would like to ask Stacy, now is the time to type those in and we can get them answered for you. I guess you did a really good job, Stacy.
Well, certainly if anybody has questions, please feel free to contact Innovia, your account manager at Innovia. They can get you connected with us. You can also Google Avalara and SST. I could put a bunch of links out there, but that gets really complicated. But there will be some follow-up to you if you have questions about that as well.
Actually, a question has come through, Stacy.
Sure.
What is involved in a setup install?
That is a very good question. I actually have some slides, and I actually don't know all of the steps exactly. So if I'm going to just kind of table that, and Angie, if you can get me the person who asked, I will send that information out. And to that person, if anybody else wants it as well. I honestly don't have all the steps memorized, and I don't have the slide in this deck. There are some deadlines as far as when you need to be registered with the SST Association. There's I don't know if that's the 15th of a month and the first filing. So there are some specific deadlines that take place, and unfortunately, I apologize. I just don't know all of them right off the top of my head. Sorry.
That's okay. We can get the information out to the attendee that asked. Not a problem.
Perfect. Thank you, Angie.
All right. Well, if nobody else has any questions, I'm just going to wrap this up. Thank you again, Stacy, for presenting today, and to everyone on today's call. Or if you are watching on demand, we thank you for joining us. And I do want to let you know that we do have a few more webinars coming soon. Tomorrow, the 18th of September, we have True Commerce presenting on True Commerce external e-commerce platform, and they're going to be doing an overview of that and a demo as well. And then on Thursday the 19th, we have Equisys presenting on document and expense management designed for Business Central, cloud, and on-prem. So check out our website for more of our upcoming events, and that's innovia.com/events. And I also want to mention our new podcast that is going on. If you have not heard of it, it is called the Innovia Conversation. And you can find out about all the different podcast platforms to listen to on our podcast page, and that's innovia.com/podcast. So check out the podcast selection and subscribe so you get notified on all of our new episodes that air. And Innovia is proud to be a platinum sponsor of BCUG NAVUG Summit in Orlando, Florida this year. And those dates are October 13th through the 18th. And if you haven't registered already, or if you want more information about Summit, you can check out our conference page on our website, and that's innovia.com/conferences. All right, thank you again for joining us, and we look forward to seeing you again soon on another Innovia webinar. Have a great day, everyone. Thanks, Stacy.